Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the gold market. So actually you can see the same picture as in the euro currency but in the opposite direction. And as we said today in analysis of the euro, if this tendency already has started 2 weeks ago, why it should occasionally stop at the eve of the elections, so for 2 weeks before elections. So because this is obviously some insurance of the investors on uncertainty about and around election day. So it means that the common sense suggests that this tendency should continue at least until the election day or when the results will be announced. And after that, maybe some relief theoretically could happen, depending on the results once again, because in probably in some results, no relief might happen. So, but usually it happens because investors start closing the positions that they have used to protect their capital on political uncertainty. This explains why the investors buying United States dollar and gold and 10-year bonds yields is rising. So in the probably we will get this stuff for 2 weeks more. Payrolls that will be reported on the beginning of November could bring some volatility on the market, but hardly it significantly will change the direction of the market. So from that standpoint of view, on a daily chart, we do not have any tools to estimate the destination points because all targets that we have discussed around 2740 has been completed and market even keep going higher. It means the only one thing that we have changed the time frame, increased the scale of this action and return back to things that we discussed in the weekly report. What are they? This is upward destination points targets on the weekly chart. Nearest one stands around 2760 and market mostly has completed it, so it's actually just $1 until this target. Overbought on the weekly stands around 28 even. And this is OP from this most recent ABCD action. Next target is 29, which is based on the major A point with this larger ABC bottom OP. But this target is already above the all-time OP that we are watching. Don't forget about 2870. But since this 2870 is the all-time target, it's based on the yearly chart, I think that $30 difference explains nothing for so big scale. So we could say that 2870, 29, I could even tell that the 3000, it's approximately the same story. Because if you take a look at the annual chart and trying to find the difference between 2870 and 3000, it will be difficult to do so. It almost stands all in the same area. But that's what we have. So it means that here, 2760, it's the next point to watch for. On the daily chart, we have nothing interesting. Overbought tells that 2770, so market easily could complete the target, so even it will have some room. On the follow time frame chart, these levels are not important anymore, but thrust remains good. And here we could keep watching for possible Napoli patterns. Although here we have some interruption, but this retracement was smaller than the 30%, and that's why it doesn't break the overall validity of the thrusting action. Besides, market has moved significantly higher than the previous top, so currently we could treat it as the single upward action. At the same time, if we take a look at the hourly chart, you could see that we have free drive pattern. So this was the first drive, second stands 127 from the first, and the third in a combination of the 1618 from the first and 127 from the second. Sorry, this is also 1618. So it's kind of the 1618 free drive. But anyway, this is the kind of the pattern that we have. Personally, I do not want to trade against the major tendency here at this area. To consider any short position in the current circumstances, because market day by day is proving that it's falling to the election day and is driven by the particular this factor. This factor still stands in action, and any retracements will be really fragile, and well, it could have this really phantom chances to success. That's why to consider any short position, I think that we need to get something really more valuable, some more reliable reversal pattern or something of this kind. For the truth's sake, hardly we will get it until the 5th of November. That's why from this point of view, any pullback currently, it makes sense to consider as a possible chance to take the long position if we will get some retracement kind of this one. And see what will happen next. So here is actually we are coming to the same conclusion as in euro currency. There's really no options exist. Either you're trading gold to the upside, catching some minor pullbacks, or you're waiting where the big event will happen, which will be in November. Then watching for a big retracement, some relief. Hopefully at this point, maybe within the 2 weeks, market even could reach our all-time target, and maybe particularly this target will be the reason, at least from a technical point of view, reason for the big retracement. So if I would consider chances to invest in the gold, take the long-term position, and physical gold to my portfolio, I probably would wait for particular this event, because it could give chances to take the position at a significantly better price, and the retracement might be really deep. In terms of the weekly, daily charts, so it might be a really significant retracement. We talked about this in the weekly report. Those who have read probably remember this. For others, if you'd like to go short, we think that it's really necessary to get the bearish pattern before taking any position. If you would like to just keep going with the gold on this rally, you have very easy, from one point of view, tool for trading. It's actually you watching for some kind of the channel that we also have on the euro currency, something of this sort, and you just wait when the market will come to lower bottom, lower support line, hiding stop below the previous lows. So avoiding the harmonic swing. Once the harmonic swing will be formed, this trade will be over. So that's the only way how we could deal currently with this situation in the gold market. Choose what you like more, what is more suitable to your personality, because trading with the gold inside of this channel without any patterns, it's a bit not very comfortable, it's a bit risky, because you don't have some really great background. You understand what I'm talking about. So, but still it is possible. So if it's okay, you're ready to take this risk, you could try to do this.